Hey, this is Matt from InvestiQuant. Today is Friday, May 1st, 2020. And this is a follow-up to this morning's video on trading the first trading day of the month. And so far today, we've had pretty trendy activity after the initial opening range. For about the first hour or so, it was pretty choppy, but after that, it's kind of broken down and continued lower throughout the session. Currently, we got about 46 points of range at the time of this recording as we sit on our lows. And what I want to do is just look at what has happened historically when you're trading near the lows going into the close on the first trading day of the month. So I've got a Fibonacci tool here on the ES showing 50% and 25% retracements of the day's range. You can see we are currently under this 25% retracement. So we're trading in the bottom quartile of the day's range, and that's consistent everywhere right now. I'm not sure what it's going to be at 3 p.m., which is the time I'm going to show you this study on. But as of right now, we're trading in the bottom quartile of its range. So let's go ahead and hop into the study. I've got all four instruments selected here. The setup is the time-based entry at 3 p.m. Eastern Time, and it is set up as a long trade. Because this is kind of rare territory, I'm not going to add any sort of opening filter to it. You just get really low on sample sizes when you look at it. So I'm not going to include either down gaps or down gaps below prior day low like we did have this morning in this example. I am going to add that we are trading in the bottom quartile of the day's range. So I can do that in here. And where is the close at 3 p.m. versus the intraday range? And if I hit equals, close in the bottom quartile of the range, it will be added. I'm not adding any additional price patterns, no profile patterns. I am going to add an indicator of below the 200-day moving average. So I'm going to add that here. And then no volatility. Calendar, we will add calendar. It is the first trading day of the month. That is important to the study, and that is the last one I'm going to add. So hit view results next, and here we go. So we've got 16 samples in the ES, 18 in the NASDAQ, 16 in the YM, 15 in the Russell. So that's about 65 total, and the bias has been pretty hit and miss here on this. These are all coming in around 55%, but you know, it's just a rare pattern. It doesn't happen very often when you start looking at a specific trading day and then seeing that it's been really weak and in a weak environment. It's just not a whole lot of samples to look at, and what we have here is pretty 50-50 the way I'm reading it. In fact, if you go down, it's been a little bit weaker here in recent years, but there's just not a lot of samples. If I scroll down here and show you this table below, this is the S&P results. If you just look here, like the last 10 years, this has only had 6 samples where we've had this type of price action going into the last hour. So of those 6 samples, you know, 2 of them have worked for the ES. If I go to NASDAQ, same thing. We've had 6 samples. 2 of them have worked. YM, 20% win rate on its 5 samples over the past 10 years, and Russell, about a 43% win rate over its 7 samples in the past 10 years. So just pretty rare and not a strong bias that really stands out to me for this pattern. So good luck the rest of the day. Have a great weekend, and we will see you on Monday.